Welcome to the Trusted Podcast with your host, Blake Johnson. In each episode, Blake interviews professionals in different areas of life that you need a trusted source of information, including trust and estate planning. You can find this show on all the major platforms, including YouTube, LinkedIn, Facebook, Apple Podcasts, Spotify, and on our website, trustedepa.com. Now, here's the host of Trusted Podcast, Blake Johnson.
Well, hello, everybody, and welcome to the Trusted Podcast. It's great to be with you again. As always, got a great guest and an exciting show ahead. So I want to welcome James to the podcast. He is a wealth manager and certified exit planning. I can't remember the designation, the CEPA. I don't remember what it stands for, but
certified exit planning advisor. Yep.
That's what it is. Yes. So we're going to talk about wealth management. We're going to talk about business exits and that kind of stuff. So James, thanks for being with us today.
Yeah, you're welcome. My pleasure. Happy to join you.
Okay, awesome. Well, start off, always like to get a little background on our guests. Tell us about your journey, how you got to where you are, and kind of what makes you qualified to talk to us today.
Yeah, thanks. So I've been in the industry since 2009. I got in right at the bottom, which is good and bad. My clients have had a good ride, but trying to get clients when I first started was really tough. I was right out of college, started with Merrill Lynch, and just trying to convince people to trust somebody after they just lost hundreds of thousands of dollars in the market to trust me. So it's been a little of a bumpy ride at first. I was at Merrill Lynch and then I jumped over to Fidelity Investments, and that's really where I got the majority of my experience. I worked on their private wealth side, and it is a portfolio specialist, building portfolios for them and then helping manage the expectations with the clients. And then about almost 10 years ago now, I left Fidelity, and my father's been an advisor since 1991. He had built a good practice. I brought some clients over. I continued to build my practice in California, and then bought him out. And now I'm, the owner of Schramm Financial Group, and we specialize in business owners. That's the majority of our clients. We set up retirement plans for them, whether it's a defined benefit or pension plan or 401k plan for their employees and them, profit sharing, and then help them kind of through their journey of running their business and making sure they have the funding needs and the growth needs that they're looking for. And then we help them exit and make sure that they live a comfortable life, sometimes on the beach, sometimes on the slopes, sometimes on the golf course, but we're here to help them out, make sure they're living the most fulfilled life that they can after they sell their business.
Awesome. Yeah, it's interesting. It's a similar story to me. I worked with my dad and then bought him out, and it's amazing how many people we've had on this show that have gone that trajectory. Yeah. Just a quick take on that. I mean, what's your thoughts on working with family and taking over from dad? Is it easier than you thought, or would it have been easier to go on your own, or any?
It was easier than I thought. He was great to work with. He did a really good job of trying to make sure. I feel like we both did, but he did a really good job of trying to make sure that, family relationship came first. And, we left our disagreements at the office and our differences at the office, and then still would have Sunday dinners and things like that. So it's been good. He actually now works technically for me, just very part-time as a consultant, as he likes to travel, but he still likes to come into the office and be involved. So it was a good transition. There was a bit of a little bit of a tension point where I come in working for a big firm, had really brought in some processes to help make the business run smoother. And he was starting to work less and less and less. And then he was like, hey, why do I want to leave this business when I'm making a lot and not working a ton anymore? And so we had to have that tough conversation of, hey, well, this isn't, you brought me in for this purpose, was to improve the business, but eventually to also transition it and sell it to me. It wasn't given, it was sold to me. So we need to put a timeline. So I said, hey, if we're not in the process by XYZ date, then I'll break off and I'll do my own thing. But that just put a little pressure on him. But other than that, it was a pretty smooth process.
Yeah, it's interesting how that goes. It's good. Glad you had that relationship. We we had our own struggles with things. I always tell people, like, I don't know that I could have made it work if he and I were in the same state. He was in St. George, Utah. I was in Las Vegas. So that definitely helped. So it wasn't, a constantly seeing him face to face thing. But in the end, bottom out, and that's what preserved the family relationship and did those things. So yeah, I always love hearing people's stories of working with families. Some people it works great, some don't. And so you got to learn what's right for you.
Yeah, I've seen some family relationships get torn apart. It happens, but fortunately for me, it worked out pretty well.
Good. Well, what do you like to do outside of work? Something unique, just something that people wouldn't expect to know about you.
I like to do endurance races for the most part. I've done an Ironman, a full Ironman. I've done a bunch of half Ironmans. I've done marathons here and there. As I get busier and busier with kids, as they're getting older and sports and things like that, I have a little bit less time. Something on mine. I'm not sure if you follow Jesse Eitzler on social media, but he started a thing called the 29029, where you climb the equivalent of Mount Everest. That's my next bucket list thing. I really want to do that. It's sold out for 2025, but 2026, I want to go to Park City and climb the Park City Resort. I don't know, I think it's like 12 times to do the equivalent of Mount Everest. So
awesome. Hey, well, I'd love to do that with you. That sounds awesome. I've been trying to get to do that, and yeah, it sells out like that.
It sells out so quick.
It's so hard to get on there.
Yeah.
Cool. Well, let's talk about. I want to start first with, how do you define the difference between a wealth manager and a financial advisor? Because I think there's a million financial advisors out there, but I'm seeing more a change to true wealth managers, and I want to get your take on what the difference is there and why you call yourself a wealth management firm.
Yeah, so there's not a lot of like defined terms in this space, and that's actually one of the problems with our industry in general, is what constitutes even just a financial advisor, right? You got these people that, and there's nothing wrong with insurance products. Insurance products play a very pivotal role in a lot of places in the wealth and financial planning area, but you got people that all they do is sell insurance as the ultimate solution for everything. And they can call themselves financial advisors, right? Because they deal with finances and whatnot. So it is kind of this tricky gray area. I am a certified financial planner as well, but also have private wealth designation, private wealth advisor designation. And to me, it's all about serving. We focus on high net worth individuals. Most of our clients are now 5 million and above. And it's really getting into the nitty gritty of we're not just managing your investments. We're not going through your, because you have enough money and you generally have a lot of cash flow. We're not going through your expenses and making sure that everything, is accounted for and things like that. Make sure you're saving enough. A lot of these people, they've got plenty of money. It's how do we make sure that this money transfers to the next generation? How do we make sure that this money goes to the right charities in the way that you want? How do we make sure that this money is getting to you in the most tax efficient manner? So that way you're making the most of your wealth. So that's really where we kind of come in, is trying to make sure that we are managing your overall wealth, whether it's consulting on real estate deals that you have or business deals, coming in, providing the right resources so your wealth, not just for you, but intergenerational for your family, your grandkids, and beyond, that they are set up for life. But at the same time, trying to make sure that we're not, we have tough conversations with our clients about how to raise your kids that they don't feel entitled as well. That's a big conversation point with a lot of our clients. They've got a ton of money. They don't want their kids to feel like they're rich because they want them to work hard. Or they're not going to do a lot with their life or expect that money's just going to come their way. So setting up the trust and things like that to make sure that they have to work for it and that they succeed in life.
Yeah, it's interesting. I really feel like that's been a big topic. Interact with clients with the last year specifically. It's come up multiple times, and it's a tricky thing. But we had a really good conversation with John Nebeker about the family bank aspect, talking about that. So that's another episode that we talked about that on. Let's talk about myths. What are the biggest myths in your industry that you see that we can dispel?
The biggest one is, people think that we are these, we have the secrets to the market, that we have a crystal ball, and, that they can get 15, 20% returns every year and things like that. We like to manage risk. That's kind of our biggest thing that we try to focus on, is especially a lot of our clients that are ultra wealthy, right? They don't need huge returns. They don't need to take a ton of risk. So how do we get you the best return with the least amount of risk in the most tax efficient manner? That's probably one of the biggest things that we run into, or that we are, a lot of people come to me for tax advice. Now, we do know a lot about the tax code because it intertwines with our business, but we at the same time are not your business accountant. So there's certain things that need to go to them, but that's probably the most often our clients, they come to us first, which is great because they trust us and they know that we're knowledgeable, but they feel like we should be able to give them all the tax advice that they're looking for. And it's like, hey, that's why we have specialists and your CPA. If he's not awesome, let's find you one that can answer and take care of these and try to reduce your taxes as much as possible.
Okay. What about red flags? If people are looking for financial advisor, wealth management, what are red flags that if they hear this, they should go, oh, I don't know about, I should double check on this guy?
Yeah, that's a good question. I haven't really thought too much about that, other than if they work for a bigger, I don't want to say big bank, I don't want to call out any names, but things that have proprietary investments. I used to work at Merrill Lynch, and when I was there, they were bought out by Bank of America, and there's all these pushes of like, oh, we need to push them into these banking products, or we need to be doing these things. And it was a big turnoff for me. And luckily I was new enough in the industry, wasn't established. It was easy for me to leave. But even when I was at Fidelity, it was similar thing. It was a lot of Fidelity products. One thing that we're through Raymond James, but Raymond James for the most part doesn't create any products. They're just our broker dealer. We're independent business owners, but we use them as our custodian. And just being with somebody that can be truly independent, I think is kind of a key in this industry. So you're not being pushed one way or another, that they are true fiduciaries. Find somebody that's going to sign on as a fiduciary and not just best interest, because there is a distinction there. And then somebody that just, promises the world. Look, I tell my clients straight up, I have clients that don't think, or before they came to us, that they would ever lose money with us. And I tell them in our first meeting, if you sign us on as your advisor, there will be years that we lose you money. That's just part of the name of the game of investing in general. We're going to try to limit that as much as possible, but depending on how risky you want to be, there's going to be years that you may lose a little bit of money, and you need to be okay with that. But there are plenty of advisors that, promise the world and then go quiet when things go south. We actually had unfortunately he's passed away, but we had a employee of ours that broke off for a while. And when times got tough, he was independent on his own in 08, 09. He stopped calling his clients back. Right. And his clients ended up just leaving him, and he ended up going under and coming back for us. He was super knowledgeable, but having tough conversations, having that ability to have tough conversations is really key in our industry, because not everything's going to be like this year, 25% returns in the market. Last year was another 20+%. The year before that, the market was down at one point, almost 30%. Tech stocks were down 35, 40%. And those can be tough conversations, especially when you have somebody very aggressive. So having somebody that you just feel that can be open and honest, and then that can truly, that you feel is really looking out for you and your best interest. There are times that we'll tell clients, hey, this segment of money or this investment, it's best not to do through us. You can do it cheaper. You can do it better somewhere else. And even though it's us turning away money, in the end of the day, we want our clients to be in the best situation. And when they can feel that from us, then that's when they actually bring us a lot of referrals, because they know, hey, James is never going to do us wrong. He's only going to try and look out for what's best. So.
Yeah, it's that quote, do the right thing and the money will follow.
Yeah.
Right? That's a big part of if I'm going to work with someone, whether personally or professionally, it's, I want them to, that's their motto. That's what they're going to follow, because then I know I can trust them with whatever, because they're doing the right thing first and foremost.
Yeah. And I've had a client that I turned away, or they never ended up becoming a client. It was a prospect. They came to me. I was like, hey, this just isn't really the right fit for what you're looking for. But they ended up sending us a referral 2 or 3 months later because they knew of somebody that, hey, would be a good fit. And they had a lot of respect for us and how we handled the process. And so it ended up working out.
Awesome. So I want to go back to the myths thing, but I want to address that from a business exit standpoint. What are the biggest myths you see with people trying to sell their business or, transition it to the next generation?
Yeah, I see a lot, which is surprising, is that some people feel like their business can't be sold. So they are the business. This happens a lot with like one-man shops or, small CPA firms or something in that nature where they are the main salesperson, they're the main contact, and they just don't know how to sell. They don't feel like the business could be sold. We had one client of ours that he was the biggest competitor in this marketplace, and he was in the construction field of construction supplies. And there was a while where he's like, who's going to buy me? I'm bigger than everybody else. And then it wasn't until he didn't even think about it until a private equity firm came in and was like, hey, we'd like to, make an offer on you guys. And that got him thinking. There's just a lot of businesses out there, a lot of business owners that don't realize how much they could sell for, especially if they do the right things. There are situations where your business really isn't worth much if you are everything, but if you made a few tweaks to the process, maybe brought in the right person before you want to sell, your business is actually worth a lot. Then there's the other side of that where some people think, their business is worth way more than it is. And we got to try to temper expectations and say, hey, yes, there are businesses that sell for 10, 12 times EBITDA, but your business isn't in the right place. There's certain things that you need to get done ahead of time. And that's kind of why consulting with somebody like us, or there are the right people to do that, that can really help make sure that your business is worth more when it's time to sell.
Yeah, I've talked to a few people and they just plan on shutting things down when they're done and walking away. And I mean, one, from their perspective, like, you've worked hard to build this, like, why would you not? There is value there. But then two, that doesn't necessarily help your clients. Like, hey, just good luck, go find somebody else to do whatever. I think there's definitely a value in finding a buyer and making sure there is a succession plan, even if it is just handing it off to somebody else. Like, you've got to do some work there to do it. And then why not be compensated for those years of growth? That's really interesting to see that.
Every business has a value of some sort, especially you make a few small tweaks here and there. You can sell for something. It's just a matter of, how much work you want to put into it. But you're right. There's a lot of small businesses that just they're 65, 70. They don't want to work anymore and they just shut down. And like you said, it's not what's best for them. It's also not what's best for their clients, and their clients are all of a sudden, now I got to find somebody else to do this. And there's not a good transition or handoff.
So at what point would you say that someone should be coming to talk to you about a business exit? Like, is it a year before, 6 months before, 10 years before? What's the ideal timeline, and what are the kind of things they should do leading up to that?
Yeah, I mean, ideally, most people are talking to us at 5 years ahead of time. There are things that we can do right before the sale. There's certain things that need to be done before an LOI is in place for estate tax purposes or just tax purposes in general, that are beneficial. But
that means letter of intent, just FYI.
Sorry for jargon. LOI, letter of intent. But yeah, it's one of those things where the more runway you have, the more that we can do for you, or anybody that can do for you in this space of just being a consultant of, hey, what are the ducks I need to get in a row to make sure tax-wise? For example, a lot of people aren't familiar with qualified small business stock and how a large portion of your sale can be exempt from taxes, especially if you are, if you're an S corp right now and you have a really low tax basis right now, because it's pretty much zero, and it's just kind of the way it was set up, and you started from scratch. Well, if you turn this into a C corp, you have to be able to get the qualified small business stock. You need to wait 5 years. So we need to start doing something at least 5 years in advance. Yes, there's going to be 5 years that you may have to pay a little bit more in taxes because it's a C Corp versus an S Corp, and depending on how you run through your personal expenses and things like that. But it's something that could be worth it. If you're going to sell for millions of dollars, to be able to exempt most of that from any type of capital gains is going to save you way more money than the little bit of extra taxes you're going to pay over that 5-year period. So that's one of the things we like to start seeing clients at least 5 years in advance, not just for qualified small business stock, but just to make sure, hey, do we have the right people in place? Are you the main salesperson? Do we need to put different processes in place? So that way, whoever's buying the business, they want to have the least amount of risk possible. That's when they're going to pay you the highest premium. When you have the right processes in place, when you have the right people in place, and the name brand is going to continue past you, that's when they're going to give you the highest multiple. So the things that we can do early to get you ready, and even talking to investment bankers or your competitors that would potentially buy you and say, hey, if we're looking to sell at some point in the future, you don't need to show all your cards, but you can tell them, say, hey, at some point we're going to want to sell. This could be in 5-10 years from now, 15 years from now. But if you were to purchase us, what would you want to see from us? What kind of changes would you want to see? And we have a lot of clients that'll do that, and it ends up working out. And sometimes those guys, they end up turning around 2 years later and saying, hey, now we're ready to sell. We did these things, what's your best offer? And so I would say get that conversation going so we can start looking at what things need to change ahead of time before you sell.
Yeah, I interact with a couple of business brokers, and one of them in particular always say that buyers will pay for what you've already done. They won't pay for potential.
Yeah.
They'll buy it because there is a potential, but they won't pay for that. And so, the more you do now, the more systems, processes, and making it so somebody can walk in and run it next day, the better off you're going to be.
Yeah, for sure. And sometimes, it takes a little while to find the right strategic buyer where 1 + 1 = 3, right? You can find the right. I had a digital marketing company just sell a couple months ago that they sold to a private equity firm that had a similar business in their portfolio, but did it on just kind of in a different lane. And it was still digital marketing, but they did a little bit different things. And they were willing to pay way more for them just because it was a good synergy for those two businesses in their portfolio to be together and then combine them. And so, you don't want to just go to market and say, hey, I need to sell in the next 6 months. Well, you might find a really good buyer, but it may take a couple of years to find the right buyer for what you're looking to do for your company. And make sure if you do have a lot of employees that your employees are taken care of. Sometimes private equity is a great place to sell, but they'll come up, they'll pay good money for it, but they're just going to gut your company, and your legacy or what you left behind will be dramatically different. So we want to take some time to find the right buyers.
Yeah, makes sense. What areas do you see, major changes happening in your industry, whether on the business selling side or the wealth management side? Any major changes you've seen?
Yeah, we're starting to see different legislation on the wealth side just to make sure that everybody's being a fiduciary and things like that. Those are kind of the big things. You're starting to see a lot of the smaller advisors get eaten up or leave the business. They're getting rolled up in bigger businesses. Just from a compliance standpoint, there's so much compliance in our industry in general that it's hard for a lot of these small firms to do it all, and so, or to do it correctly, and they don't want to get sued. The SEC is notorious for that's how they pay for themselves, or the FINRA and things like that. So they come out and they find different things to sue different registered investment advisors for. On the business selling front, I'm not seeing a lot of change. I just know, like right now, there's a lot of money in private equity that hasn't been deployed. Interest rates are high. So they've been holding back their money, and interest rates haven't dropped as quickly as they thought. And so the deals they weren't as favorable for them over the last couple of years just because of where interest rates were, but they just haven't dropped. And today, I don't know when this is going to get released, but Jerome Powell just announced that they're dropping interest rates a quarter of 1%. Treasuries actually jumped up because he was, talking a lot about how concerned they are about inflation. and inflation might be, might jump back up a little bit, and they are concerned about that. So you're seeing all this money. These private equity firms, they have a mandate that within 7 years they've got to do something with their fund. They got these funds. They've been buying companies. Well, they've got to deploy all this money, and then hopefully within a certain amount of time period, sell these companies or roll it into a new fund. They have these time constraints. So you're starting to see private equity firms pay a lot more right now for certain industries, especially things with recurring revenue. If you have a monthly or annual recurring revenue, you'll see buyers come in and pay a premium for those right now, just because they're more predictable. There's less churn, there's less business waves going on in the business, and so you're starting to see like HVAC companies start to come out with ways to get recurring revenue of memberships. And when you're a member, then you get priority service and you get discounts on your services and things like that, but you're paying a monthly revenue. So you're starting to see that with businesses, because that's what's getting a premium when it comes to valuations, because all these firms that are coming in, especially private equity, they want to see as much recurring annual or monthly revenue as possible.
Yeah, it's all about the stickiness. Are these clients going to stick around and use you again and again and again? If they're signed up on a monthly contract, then yes, they are. So
yeah,
all those things to consider as you're looking to sell.
Even if they don't like the new ownership, it's change. A lot of people are resistant to change, and so they stick around for way longer than they would have if there wasn't a contract or some kind of service agreement, or even if it's not like a hard contract, they're just month to month. But taking that off of their card, calling in and canceling, it's just takes work, and people are slow to do that. I mean, how many subscription services have you said, oh, I'm going to cancel after the first month for free, and then had it for 6 months after you realize, oh, this is hitting my credit card bill? So you see a lot of that.
Yeah. So for business owners, that's an advice. Like, hey, if you have some way of doing that, it's a great way to grow your business, to make sure that it is sellable and at a higher premium.
Yeah, I've got a CPA client that he does basically, it was part of his tax planning services. He'll prepare your taxes and things like that, and that's all part of included. But he charges a monthly fee, and then you can call him as much as you want. He's not going to bill you. He'll do 4 or 5 sessions of tax planning throughout the year, and it's all about trying to get the annual recurring revenue. Even though he probably, in some instances, he doesn't make any more money from you, it's going to end up being a wash of what he would have charged you for his tax preparation, because he's going to include what's the word I'm looking for? Strategic planning. But if he's going to get you on this monthly, and it just kind of makes that relationship stickier, it also can help the relationship feel healthier. Is you're not being nickeled and dimed every time you call or when you want things done. He'll just take care of it all underneath this umbrella of this monthly service. So I'm starting to see it in industries that I haven't seen it before.
Yeah, we have something similar in our firm. After clients have paid for the initial setup, we have a private client membership they can join in, and they don't get charged for updates or changes to any of their documents. And for that reason, like, it's clients love it, because they're like, hey, I don't have to get hit with the bill. I know exactly what I'm paying for it each month, and it's taken care of, and I have less stress because it's all into their budget. And so it's not that it's a bad thing. A lot of people like that predictability in it.
Exactly.
So what are 1 or 2 things a client should do, or someone who's looking for a wealth manager or business exit, what should they do before they find somebody to help them, before they come to an advisor?
Yeah, a lot of clients, they just need to know what their real monthly or annual expenses are. A lot of people have no idea, especially the more wealthy you are and you don't go by a hard budget. But it's hard to plan for what you're going to need in retirement if you have no idea how much you're spending on a monthly or yearly basis. I have people that come to me that say, oh, I probably only need, $10,000 a month. That's with my mortgage and everything, 10,000. And then I'm like, okay, you say that, but you make $300,000 or $400,000 a year, and you're only saving in your retirement plan $25,000. I know what the estimated taxes are going to be in that situation. So you're probably spending closer to $20,000 a month, and you just don't realize how it all just adds up. Every once in a while, I love my wife. She's great. She takes care of things at the house, and she runs her own business. But sometimes she doesn't realize how many times there's been Target and Sprouts runs and all these different things. And it just, those are minor purchases, but then you do all these other memberships, or we do this trip here and there, or you got to get a new car. A lot of people forget about, maybe you don't have a monthly payment for your car, or you used to, but it's all paid off. But you got to buy a new, most people are buying a new car every 6, 7, 8 years. And so whether you do it in a lump sum or you do monthly payments, you still need to factor that in. And a lot of people just don't think about those type of expenses, or they don't include their vacation expenses. They're just thinking about their monthly. And so I think a lot of people really severely underestimate how much they're spending on a monthly basis, and how much. So then when we're trying to figure out for the future plus inflation, what they're going to need during retirement, especially as we're starting to see people live longer and longer, I truly do believe that in our lifetime, we will see people live to 140, 150, or maybe even beyond that, just with the advancements in new drugs and healthcare that we're seeing. But it's just, we need to start planning for people to live longer. I mean, we've already seen that's why Social Security is starting to have problems. By 2035, the Social Security trust fund that they have, that's excess money. Social Security is not going away, but the excess money that they have is going to be depleted. And then just solely relying off of tax revenue, we're going to have to cut Social Security by like 25% to solve that. Or if they raise taxes, or there's other things, or don't let you take Social Security until later in life, but we're just seeing advancements that I feel like people have to save more than they think for retirement, is we're going to live longer. So that's probably one of my main concerns with clients when they come to me, is just how much do you really spend, or how much do you really think you're going to need to spend during retirement? Obviously, it's hard to predict that to some extent, because your life in retirement is going to be different than right now. But there are certain things, if we can just have a better idea of how much you're spending now, then it's easier to translate. But a lot of people, they have no clue of how much they're really spending.
Yeah, especially if you have the spouse that doesn't handle the finances, and so they don't realize it. I mean, that's the way with my wife, until I actually started sitting down and showing her, like, look, here is the monthly credit card bill. Here's what you're actually spending. I know you think it's this, but here's where it is. Not saying it's bad. I'm just saying you need to be aware.
Yeah.
Every time you click on Amazon or whatever, it's there. And it's the same thing for a business. You have to know your numbers. What is your expenses? What's your actual profit? What's your profit per customer or per item or whatever? The more you know your numbers, the better the plan can be, and how we can help with that stuff, right?
Yeah, getting a good P&L statement, like getting a good bookkeeper. A lot of small, especially on the smaller business side, they're trying to save money, and they don't pay for a bookkeeper, and they're inputting it all themselves into QuickBooks and things like that. They don't really realize how much, or especially if you do have a bookkeeper and you're just sending everything to them, how much you're really spending on different things that you just don't need. I just went through my P&L statement of just trying to projections for next year and thinking about things we're going to be cutting and things we're going to be adding expense wise. And you're like, oh man, I had no idea I spent $25,000 on marketing this year, or, on these different memberships that I have of this networking group or this golf club or things like that. It just, when you start adding it all together, you don't realize how much of that money is going. And it's not to say it's bad to have those things, because a lot of times those are things that bring you business, right? You need to be spending to bring in new clients and things like that. But just having a good idea of where you're at is, I think, really important. And then before you sell, we try to make sure clients take out as much of their own personal stuff out of their balance sheets and out of their P&Ls, just because if you're running all your, to lower your taxes, I get it. We're trying to run as much through the business as possible, but buyers want to see a clean P&L statement. They want to know exactly what they're buying. They don't want to see all these add backs of say, oh, well, this is personal and this is personal and this you're not going to need to do, and you're not going to need to do this. They don't want to see that. They want to know, okay, is this P&L statement, can I trust it and not have to go back and try to figure out exactly what can be deducted, taken out of the expenses, and what is reality. So I would say try to clean up, get a good profit and loss statement ready for us, so that way we can take a look at it and get a better idea of what you could sell for, and then better idea of what things we need to clean up out of it. So.
Okay, well, we're about out of time. I always like to end on, question of what's the best advice you've ever been given, and then we'll wrap it up.
Best advice I've ever been given. That's a good question. I don't know if I can come up with, I don't know if there's like a phrase or anything like that. I've just always been of the mentality of, no one's going to give it to you. You got to work hard. You got to go after it. Life just, I'm constantly telling my kids right now, my oldest is 8 and she's all about fairness. She uses the fairness word all the time. Mm-hmm. And it's just like, life isn't fair and it stinks. And you got to overcome these things. And yes, your brothers are going to get things that you don't, or you have some event that's going to, preclude you from doing something fun because you're doing dance or soccer or whatever it is. But I just think in life, I've just, at first I used to kind of blame and have a lot of blame in my life of why things weren't working out. But the moment that I stopped, pointing fingers and just said, what can I do to overcome these things? That's when I really started seeing the most amount of personal success in my life and then business success. So.
Okay. Awesome. Love it. Well, James, appreciate you being on, sharing your expertise. And yeah, thanks for listening in, guys. And we will catch you next time on the Trusted Podcast.
Thanks for having me on.
You've been listening in to the Trusted Podcast with your host, Blake Johnson. You can find this show on all the major platforms, including YouTube, LinkedIn, Facebook, Apple Podcasts, Spotify, and on our website, trustedepa.com. Thank you for your positive reviews, comments, questions, and for sharing this show with others. Please subscribe to make sure you are notified each time a new episode is released each week.